order to review the markets and be aware of what's going on and what you should take care of. So it's a Thanksgiving Day in the US, so US markets are closed. That's why we've seen a bit of a slip. Let me just share my screen as well. So we have seen a bit of a breath, as they call it, as analysts call it, from the dollar index. Let me just enable the chat. Okay, the chat is on. Perfect. So we have seen a bit of a slip, not temporary, so a slight slip from dollar index down to 96.63. So that looks to be more or less to the fact that the US markets are closed, even though the European one, the Canadian one, the Asian ones are still open. So the only one that is off is the US market. So volumes, however, have declined slightly. But anyway, dollar remains at the 17, if I'm not mistaken, it reached 17 months at high territory. So at a territory that we haven't seen since June, May 2022. So we remain on the path of a quite strong, or of a not quite strong, a very, very strong dollar. You can see the weekly candles being decisively bullish, with the expectations of sooner than expected of a nearby rate hike by Fed, the remuneration of Powell, the intact growth on the economy, in the US economy, in the jobs market as well, supporting the dollars and the dollar, and keeping it as the strongest currency for the last actually for the whole month, if not the whole the whole quarter. So as I said, focus was actually turned to Europe, to be more precise, because we have seen that Europe COVID cases are rising. So Europe is now in the center of the pandemic once again. This new wave has actually caused tougher restrictions in a lot of parts of Europe, and this is something that it has weighted on the euro, but also, so this is euro dollar at 112.25. Yeah, I'm getting the questions from YouTube only. Hello guys, sorry. Hello, which pair is this? So initially I missed your question. So initially we had the dollar index. Now I have now what I'm presenting is euro dollar in the daily chart. So we've seen that it remains to the downside for, it should be more than 2 weeks now. Let me just 11 days in a row to the downside at 112 territory. That I think you already know that this is taking us back to March 2020 territory, with euro dollar looking like in a free fall. So it's a combo of things that actually affects and weakens the euro so far, okay, and it could likely continue adding pressure on the euro, okay. So this is the daily chart. In the intraday outlook, for example, in the 1 hour, in the short term time frame, such as the 1 hour, we can see that euro managed to recover some losses so far today, but overall this looks to be on the absence of US, as I mentioned, and maybe boosted also by officials, because we had a lot of officials speeches lately. We had also this morning we had the German 10-year rates. We had consumer confidence from Germany, even though the from data perspective, we had the consumer confidence from Germany declining. So that is something that could be explained as the aftermath, or actually not the aftermath, but the immediate impact from the COVID situation. So this is clearly COVID situation to be blamed in regards to a slowdown and decline in the German consumer confidence in December reading. So also we have seen so far today the third quarter GDP also revised slightly lower. Okay, and by the breakdown we could see that we could confirm that private consumption was the main driver of the of German GDP, third quarter GDP. But that's why, guys, it's we are nearly at the end of the year, right? So the end of the fourth quarter. So because of the it's expected any data that we will get in regards to the final quarter of the year are expected to be proved to show that the virus situation, this refresh of this reinforcement of the virus, the enforcing of tighter restrictions in Europe could hit hard the service sector as we're moving closer and closer to Christmas, to New Year's Eve, and etc. So that was the very first taste this morning from Germany. While, as I said, we had a lot of official CCB comments, sounded a bit hawkish, actually more hawkish than what was expected, and that explained this boost on euro. So I will stay a bit on the euro because other than the latest, this week's comments, hawkish comments from ECB, we had the confirmation that the German finance minister will go to the liberal FDP party. So what this means? This means, guys, this implies that since the finance minister, sorry, it will be from the FDP party in Germany. It's a party that it's really presenting a more it represents to be more resistance to debt neutralization across Europe. So that implies that they will not really they will really pressure the ECB to stop or limit or detect the asset purchases to end eventually the PPP program and etc. So this is another thing that this, the news on the confirmation about the German finance minister is something that boosted the European stocks, such as the DAX, for example, which opened higher, but also supported euro as well on the absence of dollar. But also, let me just you can see that this boost was seen in other against other majors such as Aussie, such as let me just put the 1 hour euro pound over here. So euro in general was supported by the hawkish vibes that we got from all the things that I have just mentioned. The German finance minister, the comments from other ECB officials, everything, all this has helped to underpin the confidence in the euro, regardless of the data that we got this morning. That's why we have, so here is euro pound, sorry, I just quickly shift, but let's get back to euro dollar. So that's why we've seen it appreciated slightly around away from the 111, let me just be precise, 111.90 territory that we have seen yesterday at the yesterday closing, up to 112.28, so nearly 30 to 40 pips higher. But it has been significantly impacted from the against the pound. So that was the biggest lift, if I'm not mistaken, the biggest bounce that we've seen for euro against the other major crosses. so far today. I'm referring, of course. So euro pound rebounded and broken the 200 period moving average, sorry, and is currently retesting the mid of actually 0.8435 territory. So you can see that momentum in euro pound remains to the upside, with all moving averages in the intraday basis in the 1 hour chart pointing to the upside and actually aligning higher. RSI is still pointing higher. It's at 70, and you cannot see that. Let me just shift my screen. Perfect. So you can see that RSI remains close to 70 and actually sloping higher. And if I put my just okay momentum indicator in the short term setup, you can see that also MACD complies with this boost. So this doesn't look to run out of steam yet. So next, let me just I will use my Fibonacci levels. So we have seen that today's bounce actually it brought the asset back to more than 23% recovery from the losses that we have seen in November. However, this is not a significant resistance area. So if it managed to extend gains, the next resistance should be at 0.8460. But now let's just find, don't have my Fibonacci on over here. Let me just zoom out a bit. So closest, the nearby, the immediate resistance area, it holds at the mid of 0.84 area. So 0.8450, 4550 is the next resistance area in the short term for euro pound. So let me just remain with you. Okay. So you need gold. Okay. Okay, I will shift to gold right now then, because we have lots of you are asking about gold, and if I'm not mistaken, gold actually was significantly boosted. So, okay, let me just. Sorry, guys. Let me just simplify this chart. And okay, so gold, since a lot of you keep asking about gold, how you frame the market in EU and gold, thanks. Okay, I will get back to EU because we have lots to say about EU still, but let's finish with gold and then we could shift back to euro and the other major currency support and resistance for gold. Okay, I'm on it, guys, right now. So this is the 1 hour chart for gold. Okay, so let me just so we have seen that. Okay, I'm gonna use trend lines, because even though we can see that gold has appreciated slightly, has rebounded from yesterday's lows, so from the 79 territory up to the 1796, you can see that it has stacked for third day in a row within a ranging market. Is in a consolidation mode, bouncing between the 75, 76 territory to be more precise, up to 1796. So it's steady. Gold looks steady on the absence of EU, on the and steady even though Fed holds a hawkish stance. So it managed to recover, managed to rebound from yesterday's lows. Okay, so that looks that it has found some support, some buying pressure due to the persistent inflation concerns that tend to support gold. However, regardless of the fact that Fed is still hawkish and the markets are really anticipating and pricing in rate hike for Fed sooner, quite soon. This is something that uh, uh, hasn't been seen so far today. That's why the asset has actually remained at 1790. So you asked about support and resistance in intraday. In the short term, the the high territory of the last 3 days and this bottom at 1778 reflect our immediate support and resistance levels. Okay, this is the immediate one, the short term ones. So let's zoom out a bit. So a break of the to the upside of 1796 could boost the asset above 1800s up to the week's latest up fractal at 1812. Guys, this is by the way short term, okay? I mean an hour time frame. So this is a very it's in the short term support and resistance levels, while the fact that it has reversed again away, it's failing to break the 1796 highs, and it has pulled back already. It brings back to the attention a potential retest of this range bottom at 1778. Okay, but overall, I should say that, like in the overall outlook, okay, gold remains under a lot of pressure, and I already explained the reason for that. This has to do on the hawkish stance of Fed. So the expectations are on the side of Fed that the Fed will actually hasten its monetary tightening. So with if the Fed as if the Fed is proceeds with it, that then means we're gonna get a stronger dollar. So this is something that could further boost to the downside, further pressure gold. So if I just let me just okay. Here is the range that we have seen for the last since September, the end of September. The asset remains within this upwards channel that has been seen since the end of September. However, it has sustained a move below all its daily moving averages and the bottom of this range for 3 days in a row. So with the momentum, as you can see over here, declining and presenting more of a bearish momentum rather than a positive one. So yeah, gold overall remains under pressure. Okay, with if the latest low, so the bottom of the range, the 1778 level, breaks out. So if we have a break below that level, then the next support area could be quite far away, down to 1758 level. That's the double fractal that we got in October and November. Okay, it's the November's bottom coinciding with October's 14th of October bottom as well. So double fractal over here. So a key support area if the 1778 breaks. So this is in the medium term. This is a medium term support and resistance area. So on the break of 1778, attention will turn to the next support area at 1758. Okay. So yeah, you need to understand, guys, yeah, that overall, what we are getting from the U.S. economy is an overall strong picture. We keep having strong economic data from the U.S. For example, we had on Wednesday. So let me just quickly brief you about everything. So sorry. So we had like we had yesterday. We had the jobless claims slightly below last month, the last week. So the weekly continuous jobless claims slightly below the previous, the last week, the previous reading. Jobless claims also slightly lower. GDP actually for the preliminary GDP yesterday has beat expectations at 5.9. So durables, sorry, I forgot about durables. So durables remained unchanged while the personal consumption has increased. So overall, if we just consider the overall economic, all the economic data that we got from the US, we can say that US still continues to present a quite strong economic picture, a growth in the US economy. So that is calling for a faster taper from the Fed. Okay, so and if we have the Fed will take place on the 14th and 15th of December, so mid of the month. So, so the data are keep adding pressure on gold as well because they support the faster taper from the Fed. Okay, so that was on gold. Hopefully, I managed to reply to your questions. Um, so let's get back to. So put the call. Hello, everyone. So Abdul is asking about US 30, of course. Let me just find my indices. Should be here. We are. So okay, I'm gonna speak about the overall the medium term outlook about Dow Jones USA 30. Here, Abdul, since the markets are off, even though we can see that it's only US. I mean, it's not. Is still open in London, in Canada, etc. So you can see USA 30 Dow Jones, otherwise holding close to holding actually the low area, holding in the low area of the month. So it hasn't managed to recover from the 35,000 territory. So we had a dip down to 35,351 level on Monday, while that since then it managed to recover some losses, but it remains below the 20-day moving average and the 50% of this move, the 50%. So yes, that's a key resistance area. That's perfect. So as you can see, this is the daily chart. Okay, so that was the move. This is the dive that we've seen, the decline that we've seen since the beginning of November. Okay, so we have seen that the 20-day moving average and the 50% retracement level clash. So that's a key resistance area for USA 30. So key resistance area at 35,902 or make it round 35,900. Okay, so that's a key resistance area for USA 30. Okay, so let me just um, so what we can say about the overall outlook right now for actually the medium term outlook for Dow Jones right now is that is steady within 35,600 and 35,900, so 35,600 and 35,900 territory. So it remains steady the last 6 days in a row. Only a confirmed break and closure above this key resistance area could resume, could boost the asset higher and to bring it back to record highs at 36,520 territory. For the time being, the medium term outlook for USA 30 remains sideways. You can see that even Bollingers are pointing on the left hand side. They have flattened. Okay, they have flattened along with the fast moving average, the 20-day moving average. So this implies that currently we are in a consolidation mode. Okay, as long as we don't see a decisive break of the 20-day moving average of the 50% retracement level at 35,900, the outlook remains neutral. Okay, only a boost above this level could open the doors up to 36,500. Okay, so um so what else I wanted to say about actually from all the major US indices, USA 30 is the one that is struggling the most. Okay, so I mean, in comparison with USA 100, so here it's USA 100, you can see that it had a small decline, but it was well supported as a because of the earnings and because of the tech companies. So the one that is struggling the most is USA 30. The reasons that the USA 100 or USA 500 has been supported in contrast with USA 30, there are around them, there are a lot of reasons for that, but mainly you should focus on the components of them. So we have seen, for example, real estate this week, energy sectors outperforming. So, but while so retailers as well, such as Gap, Nordstrom, etc., having providing a big drop. So because of, for example, the latest losses that we have from components of USA 30. So let's get back to USA 30. Was Gap and Nordstrom that dropped by 23% and 29% yesterday. So that's something that added pressure on the USA 30. Okay, and let me just also having yes, that's USA 500. The only one that sustained it has sustained its gains above the 3700s. Okay, territory is the only one that it hasn't really it managed to sustain record highs along with USA 100. The only one that declined and did was Dow Jones, the USA 30. And as I said, it has been impacted by the energy, by the by the earnings releases. Other than that, so let me see your questions, guys. Dollar yen. So now this is MT4, dear Trawas. This is MT4, MetaTrader, our platform, the most widely known and popular platform in the world is MT4. Okay, so I'm not sure whether you're a client with us or not, but if you are, you can download it and start with a demo account maybe, and start to get familiar with trading if you're a trader. I'm not sure. I don't know. Okay, Japanese yen. Okay, let's get to yen then. Thought of the Japanese yen fundamental. Yes, sure. So Emma. Okay, dollar yen. Let's flip to dollar yen. Emma, you should know in general that, guys, you have to keep an eye on the banks. Okay, what drives the market the last nearly 2 years, okay, and is expected to drive the market then 2022 as well, is the central banks due to the inflation risk. Okay, so there are actions on in order to control, if you want, or to overcome the inflation pressure. Okay, so dollar yen in general, um, it has been heavily impacted, and actually the key driver of dollar yen remains other than that, it remains the divergence, the huge divergence that there is between the Bank of Japan, the ultra commodity, the lower for longer rates approach of Bank of Japan that has been for ages. I mean, it's not something new. With the other major economies, with against Fed, against ECB, against the Bank of England, against Bank of Canada. So you should always have in mind that fundamentally the yen, what drives the yen is the yields differentials, the difference, the wider spread that we have between the Japanese bonds and the bonds from other major economies such as US, United States, bonds, guilds, and etc. So right now, um, um, yeah, as I was saying, Bank of Japan is sustained and always had, and it's expected to keep his ultra accommodative stance. Okay, so keeping the rates low for longer, and etc. But on the other hand, we've seen that the other central banks are actually are actually more hawkish there. There are a lot of expectations, and actually there is anticipation of proceeding to rate hikes in December, or even in the very first few months of 2022. So this remains the key driver of all the major crosses, the yield differentials, the same stands for euro and dollar as well. So, okay, so as long as the spread between Japanese bonds and US government bonds widens, then the higher the dollar yen will go. Okay, so as you can see over here, dollar yen already broken the one, actually already broken the 115 territory, is above it. So this implies um, a retest of 2016 highs. So it managed to break 4 years resistance. Okay, so that has to do on the big on the differences that we have between the two economies, and the widening yield differentials that they are in favor of dollar. Okay, and and overcoming actually the yen's usual habit of rising amid risk of conditions. So we don't see the yen actually appreciating on every time that we have risk of conditions, but it's mainly and solely, I will say, driven by the yield differentials that who are on the favor of dollar rather than yen. So with the higher yields and the rate hikes from Fed and other central banks in the near future, this could further boost to the upside the dollar yen and any other yen crosses, to be honest. So if you check, you will see similar reactions, similar performance from other yen crosses. So for example, let me just accept euro though, because euro hasn't really so over here you can see that CAD yen rebounded this week from the 89.50 territory. Where is my, let me just come on. Aussie yen stabilized and is back to 82 level, even though the overall outlook remains to the downside. So, found, okay. Swiss yen also bounced this week, breaking the 10 days territory and is back above 123 territory. However, we need for all the other yen cross other than dollar yen, we need to see a decisive break of the 20-day moving average, 20-day moving average in order to the outlook from neutral that it is right now to turn into the positive side. So in general, you should know that fundamentally, okay, dollar yen, let's get back to dollar yen. So I could give you the immediate support and resistance levels as well, and the long-term ones as well. You should know that dollar yen remains to the upside as long as we keep having higher yields and as long as the market continue pricing in rate hikes from Fed in the very short future. So next resistance area for dollar yen is back to 117 or even 118 territory. So the highest that has been seen back in September 2016. Now, intraday now, pretty choppy today, holding, however, a move above 115 level. So narrow sideways. So I will just, so you can see that the 20, so let me just, so 50-hour moving average could provide the immediate support level. Actually, to be honest, the immediate support level could be seen on the latest low that we have today at 115.23, but the 50 period one looks better than this low, since it coincides also with the latest factor that we got over here back in the 22nd of November. So immediate support holds at 115 on the 50 period moving average, on the 50 hourly moving average, on 115.17 territory, and around 115 level as well. So these are the two immediate support levels: support number one, support number two. On the flip side, to the upside, resistance holds at the latest highs and the 115.50 territory. So the high that we have seen this week, and actually the 4 years highs. So 115.50 remains the key resistance level. On the absence of US, we can see that it is moving sideways. It entered a short-term narrow range here with the Bollinger's flatten and being narrow, confirming this the consolidation for the rest of the week, because US market will have an early close tomorrow as well, so volume remains quite low. As I said, overall the fundamentals support the dollar yen. Okay. Some questions. So how do you get to know when to enter a market? So in regards to entry points, dear Komiklisha, depends on which time frame you're trading. I mean, what kind of trader you are, what kind of strategy you're following, what kind of trigger points you're following. I mean, it depends on your approach. If you, for example, over here, okay, if there are people that they like, they applying their in their daily setups, in their intraday setups, fractals, and they consider the breakouts of the fractals as an entry point. So it depends. This is a very generic question. Uh, I'm not sure whether you have traded in the past or not, but if you haven't, you're not a trader yet. You need to go through all the basics until you reach the level to have your own setup and to be able to identify entry levels and participate into and actually open positions to the market. So it's a very generic question. It depends of what kind of trader each one of us is, what setup does he use, what time frame he prefers to trade, what kind of asset he prefers to trade. So it's a very generic question which um, um, I cannot really help you with right now. You need to go through the basics. So we have a lot of the last 2 weeks, this week and the last week I went through the basics of markets. So the understanding the basic of markets in my webinar. So you can find these webinars in our YouTube channel or in our website. This will help you um, um, starting with to start with, if you want to trade someday. Okay, so if there's anything else that you want to ask me, go for it. I'm here and I will try to reply right now. Okay, so yeah, there are a lot of strategies, a lot of different ways to identify entry levels. That depends on, as I said, on on what kind of trader you are, time frame, the asset that you want to trade, the tools that you're using, the technical tools, and etc. So, um, mhm. so let me just scan a bit my bullet points to see whether I missed something until I got further questions from you guys. We haven't seen oil today. No one asked about oil. Or any other crosses. Okay, the latest news that we have in regards to oil-related news, is, as you might already know, it was the release of millions of barrels from 6 countries. It was a coordinated move from US, China, India, South Korea, Japan, and UK. So why they have released million of barrel of oil. That was is a strategy that they proceeded with in order to control, to add pressure actually on the really high energy prices right now. So it was an attempt to push the energy prices lower, even though this looks to be a backfire because oil managed to bounce back to 77, 78 territory this week. Next week we're gonna have OPEC plus meeting, and we're expecting actually OPEC to is expected to react on this coordinate release of oil reserves from these major economies that I just mentioned. So yeah, if indeed OPEC next week respond to this action, then we might see further support of oil. If not, then we might see the oil being under pressure. For the time being, the oil is off its highs. The highs were at 80, 83, 80s territory. Right now it's at 70, it's at the 77 level, 77.50. Remains below its 20-day moving average, okay? Even though um, it holds at the last 2 months highs, however, is well off its lows, as I said. So if I just use my daily setup, you can see that overall, in the medium term, in the daily time frame, the oil remains under pressure. Since that hasn't managed to, it remains actually below its 20, 50-day moving average, while the momentum looks neutral to negative, with RSI below 50, flatten, MACD also below zero, so negative, even though it's really, really close to zero. So that implies to more of a neutral to negative territory, negative outlook ahead of OPEC Plus meeting next week. And let me check a bit the questions. No further questions, guys. This is your session. You can ask anything you want, and I will try uh, to ask all of your questions. So let me check on Facebook if I'm able to log in. So just a quick summary then, since I cannot see more questions coming. Um, so, guys, as just a quick summary, um, the we have seen, we have, and we are expecting to still to see as well next week, the markets continuing to pricing a more hawkish stance from the central banks, except ECB though, even though it sounded a bit hawkish this morning, but mainly from Fed, mainly from Bank of England, mainly from Canada as well. So we are expecting to see the markets continuing to pricing the rate hikes for the year ahead. Okay. On the flip side, we are expecting to continue was expecting in regards to the oil to see the attention turning to OPEC plus. Okay, and then whether they will actually react against the oil release reserves. Other than that, what else? What else? Let me just scan a bit. Oil is expected to continue, is expected to remain one of the strongest currencies, actually, to remain a key gainer across all the major currencies. As I said, well supported by the strong incoming US data, by the Fed, who is actually mounting the inflation concerns and etc. Um, so this, so we might see a bit of a slowdown due to the holidays, but yeah, dollar is expected to remain on bid, with next resistance area back to May 2020 and the 97, 98 territory. While euro is expected to remain on the back foot, along with Swiss as well, and yen. So, what else? What else? What else? Let me just check the calendar, see what else you should. Tomorrow, guys, by the way, tonight we have inflation from Tokyo, and tomorrow, the only thing that we could drive the attention is the retail sales from Australia this morning and tomorrow morning, and the GDP, the third quarter GDP from Switzerland, and we're gonna have Lagarde speaking as well at the same time as the release of the GDP of the Swiss GDP. So, but nothing other than that. A lot of Fed speeches, a lot of ECB speeches tomorrow as well. So, it would be Ms. Lagarde, would be ECB Snabel and Panetta as well. So, the attention will once again tomorrow be on the officials, so we might see euro remaining the holding the spotlight tomorrow, sorry, due to the officials upcoming comments. So I don't have any further questions, so I'll call it a date. Thank you very much for attending. Not sure whether I'm missing something, but keep an eye on the news, keep an eye on the restrictions, on the COVID spread, on the central bankers, as I already said, and OPEC Plus next week as well. So thank you very much for attending. Hope you're having a great day ahead. And if you're celebrating Thanksgiving, happy holidays for you guys. Thank you. Thank you. Bye bye.